Today on Alphamatic, we talk about insurance. Hi, my name is Edward. I'm a financial advisor, and today on Alphamatic we're going to talk about your short-term insurance, life cover, your last will and testament, and we're going to be talking about your medical aid and gap cover. Let's get into it. First off, today's conversation, I'd like to start talking about short-term insurance, and please remember that this is a very technical topic, insurance as a whole. If you're not sure about anything, please make sure to speak to a financial professional. In my case, what I'm providing here is information of a general nature, and we should not consider it to be advice. Now, starting with short-term insurance, really what short-term insurance is about is your home, your vehicle, and your other assets insured against theft and fire. This is the simplistic way of explaining it. And the reason I wanted to start with short-term insurance is because many people consider short-term insurance more important than their life cover. Now, I have my own views on that, but people would rather pay for their short-term insurance than pay for their life cover if times get really tight. If my car were to be in an accident, I would have a heart attack and die, probably, so I want my car insured. But if something were to happen to me, then what about my family? Anyway, I digress. Now, on the topic of short-term insurance, let's talk about some of the sections that we cover there. And short-term insurance consists of basically your homeowner's insurance, your household goods, your all risks, your computer equipment and electronics, your motor vehicles, your motorcycles, your watercraft, boats, your caravan and trailer, and then there's other things that can be insured there. It differs from insurer to insurer, so you're going to need to speak to your company to find out what exactly they cover and what they do not cover. Now, with regards to homeowners, one thing I want to make mention of, if you're somebody that lives in a block of flats, usually your homeowner's insurance would be part of your levies that you pay on a monthly basis. So before you go ahead and insure your property, just find out from the body corporate if you're already insured there. You can pay twice for insurance. When the accident happens, it doesn't mean we're going to pay twice for the property, okay? Moving along. Next topic I'd like to chat about is life cover. Now, there's a couple of things that life cover breaks down into, and I'm just going to give you the fundamentals here. It basically comes down into your life cover or your death benefit. It comes down to your disability benefits, your severe illness or dread disease benefits, as some companies would call it, and then something that I know Old Mutual, the company I work with, provides, which is a retrenchment benefit, which I'll chat about in a little bit. Then, lest I forget, there is also the funeral cover benefits, okay? Now, let's start with the life cover or the death benefit first. Would my family be okay in the event of me passing away or becoming disabled? With life cover, there's two things that we are usually looking to answer. The first one is, if something were to happen to me, if I were to pass away, do I have any debt that needs to be settled? For example, the bond on my house. If the bond on my house isn't settled, my family doesn't get to keep the house. The bank repossesses it, they sell it off into the market. If there's any money available, that will be returned in terms of my last will and testament. The second one that we look at is, if I were to pass away, my salary goes with me. So even if the bond is settled, would my family be okay financially if I were no longer there? So here we're talking about replacing my income. Moving along, disability benefits, pretty much more of the same, but you know, my personal opinion is disability is worse than death, and I'll tell you why. you're there to actually see things fall apart. Two things that we still need to settle. The first one is, if I have a bond on my property, I'll need to settle that bond because I'm no longer able to work, so that my family is able to keep the house. The second one is, just because I'm disabled, it doesn't mean that I won't be around for a long time. I'm going to need to replace my income. In this case, the best option to look at is disability income benefits. They tend to be a little bit pricier, however, the benefit is multiples of a lump sum disability benefit. Moving along to number 3, severe illness cover. Now, the big ones in terms of severe illness cover is, my client has been diagnosed with cancer, my client needs a bypass graft, basically open heart surgery, my client has had a stroke, or my client has had a heart attack. Now, severe illness cover basically pays out a lump sum into your bank account. How you spend the money is up to you, but it is on diagnosis of a severe illness that is covered in the policy contract. So, with Old Mutual's claim statistics, the latest ones available from 2017, we're talking about 81% of all claims are the 4 I just mentioned: cancer, heart attack, stroke, and coronary bypass graft. Alright? 62% roundabout of those claims are for cancer alone. I think we can all safely say, not everybody knows somebody that is disabled, but everybody knows somebody that has had a severe illness, specifically cancer. So important to get it. In my opinion, more important to get it than your disability cover. Why? Because people are claiming for it. Next point I want to get into is funeral cover benefits. These are the ones that pay out within 48 hours from the insurer receiving all the information they need to process the claim. And predominantly what this money is used for is for the funeral arrangements, transport of family to and from the funeral, and that sort of a thing. Depending on your cultural background, you're going to have different amounts that you're going to pay for a funeral. For a black funeral, you find that they tend to be quite expensive. And what you want to do is, if you are the sort of person that, my typical client, you live in town, you come from perhaps a rural background, everybody back home thinks that you make a lot of money, and when things occur, you're going to be expected to make a contribution towards events. This one is an unplanned one. The best way to prepare for it is to have funeral cover benefits for your extended family members. Moving along to a last one, which Old Mutual has, not all insurers have it, is a retrenchment benefit. Now, in recent times, 2019, South Africa, we have come to find that the economy is slowing down. People are really starting to struggle. If you are someone that is in that type of industry where you feel, I am possibly at risk of being retrenched, take a look at this benefit. And what I'm going to do is, I'm going to include a contact form so that you can just fill in there, I want to talk about a retrenchment benefit, and then I'll get back to you and we can chat more about that. Moving along to the next point. So important, so important. If you have assets, you need a last will and testament. And essentially what a last will and testament is, this is the document that says, in the event of my death, I leave all of my assets to the SPCA because I love animals so much, for example. Usually it's left to your wife, your children, your next of kin, whoever you want to inherit all of the things that you have built up in terms of assets during your lifetime. Now, with a last will and testament, these can be done for you at your insurer, at your bank. An attorney can do it for you, and I'm speaking under correction. You would possibly be able to buy a pre-printed will from a place like CNA stationery stores. Now, here's how a last will and testament basically breaks down. First section comes down to your personal details. my name is Edward Baitsewe. I'm a financial advisor. These are my contact details. The next section we ask about is, we've got your information, we've got your spouse's information, and now we need to know how you are married in community of property, out of community of property, that sort of a thing. Then we require the information of your children before your current relationship, as well as the children inside your current relationship. Get all their information. Then we require a list of assets and liabilities. So for example, I would say I own a property, the value of my property is R1 million, and I have a bond outstanding on this property. The bond outstanding is 800,000. So basically the net value of that property in my estate is 200,000 rand. The next section that would come up there is a section that talks about your pension fund benefits held with your current employer. Do you want those to be dealt with in terms of your last will and testament? Then we get to the very important part of your conditions of your last will and testament. And essentially what we're asking for here is, in the event of my death, who do I leave all of my assets to? The typical will for a family of a mom and a dad with children is, in the event of my death, I leave all my assets to my spouse, and my spouse would say the same. In the event of his or her death, he or she would leave all of their assets to me. In the event of the next condition, there would be, what happens in the event of both you and your spouse passing away at the same time? Who gets the assets then? So in our case, we would say these assets we leave to our boy and girl, our children, in 50-50 shares. Now, the next important question that comes up after that one is, in the event of what we call family obliteration, basically we have lost the whole family, what are the conditions then? Then in that case, I would say leave my half of the estate to my mom and dad, and my spouse would then stipulate conditions of what would happen if us as a family unit would be no more. Okay. Next section that also comes up there is, in the event of you passing away and money is left to minors, should that money be held in trust for them? And I think this is really a good idea to have. Typically you would have a trust for a child up to the age of 18, which is the age of majority, or a different stipulated age, if you choose to say 25 for example, where we're saying trustees will manage the child's money on their behalf up until they reach an age where they're old enough and responsible enough to look after their own assets. A next one that comes up is, who will be the guardians of your minor children? Now, very simply, this is a wish. Just because I stipulate inside my last will and testament, I want my uncle to look after my children. There's no obligation on my uncle to look after my children, but it is me saying, these were my wishes before I passed away. Now, something that is really important to remember here is, you can have a family member looking after your children, and you can still have trustees managing the children's money. And what is great about this is, the trustees would, out of the trust, pay school fees directly to the school, and would pay an income to your the guardians of your children on a monthly basis. A child this age, if school fees and X, Y, and Z were paid for, would require a monthly income to live of 5,000 rand. Then 5,000 rand gets disbursed to the guardian of that child to look after that child. Right. Then that is our last will and testament. We move along to your medical aid and gap cover. Now, essentially what medical aid does is, it is a deferment plan for the payment of medical procedures and medication that you will need in future. Where that becomes important is, if suddenly I am diagnosed with a terrible disease and I need medication or I need to see specialists, then I'm going to need to start paying. Depending on the plan that you're on, a lot of these costs will be handled for you by your medical aid. Okay? Now, a problem that you have is, especially when dealing with specialists, is they can charge you multiples of the standard going rate, typically up to 5 times. So if a surgery costs you 10,000 Rand at standard rates, when you see the specialist, it could go up to 50,000 Rand. Now, I wanted to show you just a little bit of information. This is real information, and we're talking about the difference that gap cover makes. So, actual information: back surgery, total medical expense 215,000 Rand. The medical aid paid 151,000 Rand and the gap paid 64,000. Next one is a shoulder surgery, and the total medical expenses there was 24,700. Basically, your gap cover and your medical aid in this case paid 50-50 amounts to it, where the part that the gap paid would be coming directly out of your pocket. Then we have a gastroscopy and a colonoscopy. So total medical expense, call it 7,600 Rand, and most of it was actually covered by the gap at 4,400 Rand, and the medical aid just paying over 3,000 Rand. Definitely important to have it. Not expensive benefits. If you want more information in terms of the prices, or you want to chat about it, I'm going to leave you a link where you can get back to me. My name is Edward, coming to you for alphamatic.co.za. If you want to get a hold of me, here's my contact information. Please feel free to like, comment and subscribe. Thank you so much.